Now let's move on to other question. This is very simple. Firstly, the first part is very simple. What the first part requires us to find out, calculate the operating, financial and combined leverage and earning per share. So that is easy, you can find it easily. Determine the likely level of EBIT if EPS is first rupees 4, second rupees 2, rupees 3. So this is new. So I'll be teaching you this you all can do it. Now firstly, please pause the video and find this question in your practice manual. I hope you all have found out this. Let's read it together and understand what the question says. Z Limited is considering the installation of a new project costing rupees 80 lakhs. Expected annual sales revenue from the project is rupees 90 lakhs and its variable cost are 60% of the sales. Expected annual fixed cost other than interest is rupees 10 lakhs. Corporate tax rate is 30%, that means the tax rate is 30%. The company wants to arrange the fund through issue of 4 lakhs equity shares of rupees 10 is, that is equal to 40 lakhs, and 12% debentures of rupees 40 lakhs. So which means that the capital structure of Z Limited is equity shares of rupees 40 lakhs and 12% debentures of rupees 40 lakhs. I hope this is quite clear. So the first thing that you will do is you will make this format income statement. You will write over your sales revenue is equal to 90 lakhs. You will write 90 lakhs less variable cost at the rate 60% of sales is equal to 54 lakhs. We get contribution 36 lakhs less fixed cost other than interest. That is not important, you have to write. So you can only write fixed cost, which is equal to rupees 10 lakhs. Earnings before interest and tax, that is EBIT, will be equal to 26 lakhs less interest, 12% on 40 lakhs, that is 12% debentures of rupees 40 lakhs. The rate of interest on the debenture is 12%. So 12% on rupees 40 lakhs is equal to 4,80,000. Therefore, earning before tax is 21 lakhs 20,000 less tax at the rate 30% of EBT is equal to 6 lakhs 36,000, and earnings after tax, this is written over here EAT, we can write over here PAT, profit after tax, 14 lakh 84,000. So you all are now eligible to calculate this operating, financial and combined leverage. It is all static formula. Earning per share also is very easy. PAT divided by number of equity shares. Number of equity share is 4 lakhs. So 14 lakh 84,000. 14 lakh 84,000 divided by 4 lakh is equal to 3.71. So therefore earning per share is equal to rupees 3.71. If you see over here, it is given here. Now that was the most easiest part, but you all please solve it in your practice manual, because practice makes you all perfect. So do not just see the sum, do not audit and go in before writing the paper. You all have to solve 1 or 2 sums, and please mark the important sum that you will solve only before exams. Okay. Now we'll find out this. Determine the likely level of EBIT if EPS is rupees 4 or rupees 2 or rupees 0. So here what they have asked us is to find out the level of EBIT. What is EBIT? EBIT is this, earning before interest and tax. How you will calculate this? So firstly I'll give you all the logic, and I hope you all will be so smart that you all can calculate on your own, and then we'll solve if you are not able to solve it. Okay. So question number 13. What they have asked us to determine the level of EBIT if EPS is equal to rupees 4. So the formula will be like this. We'll go in a reverse direction. Okay. Earlier also we have done this type of sum, not similar sum but type of sum, reverse calculation. So we have EPS. How we calculate EPS? EPS is equal to earnings before interest and tax minus interest and minus tax, that is 1 minus tax into 1 minus tax. That is, this will become EBIT 1 minus tax rate. I hope this is quite clear. Divided by So EPS is equal to this EBIT minus interest and minus tax. And how EPS we calculate? Number of equity shares. Okay. So since we are provided with the EPS in the second part of the question which is required, so first EPS is equal to 4, so we need to find out EBIT. So EBIT will remain like this only. Interest rate will not change again. Interest rate will be how much? We'll calculate 40 lakhs into 12%, which is equal to 4,80,000 into 1 minus tax. How much is the tax rate? 30%. So we'll write 0.3 because 30%, which is equal to 30 divided by 100, is equal to 0.3 divided by number of equity shares. How much is the number of equity shares? 4 lakhs. Hope this is quite clear. So 4 into 4 lakhs is equal to EBIT minus 4,80,000 into 0.7. 1 minus 0.3 is equal to 0.7. So therefore 16 lakhs is equal to 0.7 EBIT minus 4,80,000 into 0.7 is equal to 3,36,000. Therefore 0.7 EBIT is equal to 16 lakhs plus 3,36,000. How? 3,36,000 will go over here, minus 3,36,000 will become positive. So it means 0.7 EBIT is equal to 16 lakh plus 3,36,000. Therefore EBIT is equal to 19,36,000 divided by 0.7. So EBIT will be equal to 19,36,000 divided by 0.7 is equal to 27,65,714.2. Okay. So similarly, if EPS is equal to 2, you all can find out EBIT. If EPS is equal to 0, you all can find EBIT. I hope this is quite clear now. So you all can solve this sum. I have just solved one part. You all can solve the remaining part. You all don't need my help over here right now. So please, if you want, you can copy this much. Pause the video and copy this much. I hope you all have copied this much. Question number 14. The following details. Firstly, please pause the video and copy this. Please find out this question in your practice manual. I hope you all have found out the sum. What this question says. This question we are not solving. I am just explaining you all. You all solve it on your own because this sum is very easy and I have already taught this type when I was teaching theory. Okay. When I was showing illustrations. So I am not solving this. The following detail of RST Limited for the year ended 31st March 2006 are given below. Operating leverage is given to us. Combined leverage is given to us. It is 1.4 times and 2.8 times. Okay, fixed cost excluding interest is given to us rupees 2.4 lakhs. Sales is equal to 30 lakhs. 12% debentures of 100 each, 21 lakh 25,000. Okay, so this is provided to us. Equity share capital of rupees 10 each, 17 lakhs. So that means number of equity shares is equal to 1,70,000. Income tax rate is 30%. You are required to calculate financial leverage. So you all can find out financial leverage with the help of this too, because the combined leverage formula is equal to operating leverage into financial leverage. So you all can do cross multiplication and find out financial leverage. No need of finding in a long way using format and all. Here you don't need to draw this format. Calculate PV ratio and earning per ratio. Sorry, earning per share. PV ratio I have taught you already in this ratio analysis chapter.